Welcome back to Next Gen Investing. Bitcoin is sliding again, but our next guest says there's no need to fear because crypto is following its historical script. So joining us now is Kiana Danial, CEO of Invest Diva and author of Triple Compounding for Dummies. Kiana, thanks so much for joining us today amid all of the volatility in the broader crypto world. Now, you've said that you don't care why Bitcoin is dropping because it follows a predictable long-term pattern. Can you elaborate on this for us?
Absolutely. But I don't care because I invested in Bitcoin for personal reasons. I am certain about its fundamentals. It actually has a place in my very well diversified portfolio. And so the reason I went in it was not to generate income, was not to just get on hype. We can talk about why I went in it, but that's the reason I'm not worried about its price. And yes, it absolutely has a very proven pattern that has been now happening over and over again. For example, the very first time, 2018, Bitcoin got to the then all-time high at almost $20,000. People were like, oh my gosh, this is probably a thing. Maybe it's not a thing. And then it crashed 85%. People were losing their minds. And then 2022, it reached another new high of almost $69,000, crashed 78%.
Okay, and so you did note that Bitcoin, and we've seen typically it can fall more than 50% after reaching new highs, like we saw back in 2022 before, then it ran to over 125K. So where do you think right now we are within that larger historical cycle?
Right, so we're not even close to the one from 2022. I set my buy limit orders the moment it reached 125K. I was like, okay, so I had 69K, and the next one for me is actually 57. And these are all key psychological levels. And the reason they work is because everybody's looking at them. So around 56, 57. And if that level is also broken, and this is going to be insane if it does happen, $38,000 is going to be the next psychological level. I haven't yet set my buy limit order. I'm kind of trying to see if it actually reaches 57. And then if it does, then I'm going to set a new buy limit order for 38. If that does happen, people are really going to panic. So it's going to be amazing for people who have confidence in it and want to buy at cheaper prices.
That is true. I mean, it's always an opportunity if you obviously have strong conviction, in the future growth and the overall expectations for the broader crypto market. And so you mentioned 38K. That would be wild. I mean, it would be definitely, there'd be a lot of, I think, noise across social media. I mean, there's already a lot of noise in the crypto world, but that would definitely create some fireworks. So say we were looking at 38 or 57K. I mean, what would really your message be to those that have felt a bit shaken by some of the pressure? You say just you're still a long-term buyer?
100%, because even back then, when none of Wall Street were actually backing crypto, like Jamie Dimon, all the people who are saying crypto is a scam now have a position. And guess what? There is a limited number of Bitcoin. Now, I'm not here to create conspiracy, but you need a crash for these big whales to be able to purchase. So wouldn't you think that there could be in some world some sort of panic selling trigger so that the market crashes so that the whales can buy? Because otherwise, like, how else are you going to buy Bitcoin? Because there's only a limited amount. There's never going to be more. So they do want it. Like, I even heard like some of these like big whales are selling their private jets and private houses to buy Bitcoin. So, I mean, now that Wall Street is behind it, I'm even more convicted than back in 2018, 2022.
Yeah, and I agree. The emotional triggers you see, which I guess I can totally understand, but it's something that I feel like for years and years we've stressed, like, don't necessarily trade so emotionally, as a lot of times your emotions can sort of get the best of you. And you mentioned this idea of looking at patterns rather than panic, which I think speaks to this. I mean, does this apply specifically to just Bitcoin, or would you say the broader crypto asset class?
I do this for stocks. I do this for everything because I know if I watch a headline, I'm going to get emotional. Like, we're humans. So that is why I create my exit strategy or buy strategy before. Like when it reached $125,000, I already set buy limit orders, and I apply this to stocks as well. If there's a stock that I really want to be in, if there's an AI stock, if there's a, dividend stock that I really want to add more to my portfolio, I don't wait for the headline to hit to then go in. I create the strategy beforehand, then there is going to be a trigger, no matter what is going to be the trigger, but the trigger is going to happen. We know that. And then my buy limit orders just go through without me getting emotional, without me having to look for headlines to create a strategy from an emotional place. So if you don't want to be constantly panicked, create a strategy before the panic hits.
Okay, before we let you go, your new book, Triple Compounding for Dummies, is out now. First and foremost, congratulations on all of your success. But really, what do you feel is the most important chapter and overall takeaway for readers that want to start building their wealth more strategically with less panic, per se?
Yeah, so triple compounding is a little bit misleading because you would think I'm talking about, oh, like I'm doing like this kind of, it's actually a lot more simpler. So what I mean, compounding really just means to put together. And the first and foremost important investment, I believe, is you. We are the investment asset and we have control over it. So the most important chapter for me would be chapter 3, because that is when you're going to go and calculate your risk tolerance so that you can create a strategy that is personal to you. Personal finance is personal. So once you educate yourself about assets that you want to invest in, once you level up even your mindset, and I know talking about mindset in finance is a little bit woo-woo, but I truly have seen people who go in without the proper mindset and lose everything in the same asset. While if you go in with a mindset that, okay, this is why I'm going in, I am confident in my investments, I know why I'm doing this, that mindset, that investment in your mindset is going to make or break your portfolio. So the first investment is actually in you. The second investment, it's still not stocks or crypto. It is your income generation. I call it external assets. Extensions, because no longer you can just go to work, have a 9-to-5 job, and just be able to retire, even if you invest in index funds, even if you invest in Bitcoin.
Okay, and these are such good takeaways. Oh, so I'm sorry, you can continue.
Yeah, I mean, the second investment is basically creating income generating assets and then investing that income into stocks, crypto, what have you, so that you're compounding in 3D, not in just an index fund that is going to take you 40 years to get you to financial freedom, if even then $1 million is going to amount to anything because of inflation. So that's the idea behind it.
Okay, and I need to remember all of this as we watch. I mean, if we see Bitcoin, of course, hit 57,000, we will be remembering this mindset and hearing your words in our heads. So we so appreciate it. Kiana Danial, CEO of Investiva and the author of Triple Compounding for Dummies.